as we see things unfolding in an environment where rising interest rates will put so much strain upon banks, upon corporations, upon the government, upon households to be able to service their debt. And if they can't service the debt, then there is a default. That being the whole issue with counterparty risk. In an environment where interest rates are low and the economy is strong, we don't worry about counterparty risk. But certainly, I think it will be a buzzword that will catch fire as we move forward, where counterparty risk in the banks, with corporations, with the inability to service debt in a rising interest rate environment and in a slowing economy, I think it will become a very big deal. So gold and silver are assets that are not simultaneously someone else's liability. They hold no counterparty risk. Over just the last 8 weeks, the amount of debt that has increased just over the last 8 weeks is unbelievable. And you're talking about it. It took this country hundreds and hundreds of years to accumulate, at 209 years, let's say, to accumulate its first 1.5 trillion in debt. It increased just since the debt ceiling was raised. We increased over 1.5 trillion. It took 209 years to do that before. And then here we are again, just over the last 8 weeks or so, we've seen another massive increase in debt at 150 billion or something along those lines. That, again, we're going through debt or increasing our debt at such a rapid pace that it is not sustainable. And I think this is part of the reason we're seeing such a groundswell of support to de-dollarize across the globe. They realize we are at a pace of money creation and inflation that's we can't sustain it. As the rates rise, banks are coming under further stress, and as more and more people run to take their money out of the banks, they have to sell their 10-year treasuries, which they're loaded up on. And as they sell treasuries, rates continue to go higher and higher and higher. It feeds upon itself. And look, just in the last 2 weeks, in the last 18 days, the U.S. has added $444 billion in the last 2 weeks. And that would be an $11 trillion per year deficit. It took us until March of 1975 to accumulate our first 500 billion from the time we started the country. And now in the last 2 weeks, we've done 444 billion in increased debt. And as rates continue to rise, not only does it put greater strain on the system, but what really makes that dollar worth less is the continuing humming of the printing press. And as they continue to print more, the dollar becomes worth less. And as rates continue to rise, it puts much more strain on a system that can't take it. And it feeds upon itself. This is a doom loop that unfortunately doesn't have a good outcome if you follow the math. To me, this is a very, very big deal. And at the same time, we have a record 17.1 trillion in household debt, 12 trillion record in mortgages, record 11.6 trillion in auto loans, 1.6 trillion in student debt, which, by the way, is the U.S. government's largest asset, and 1 trillion in credit card debt. So at a time when people don't see what's coming, they are not in position to be able to weather this storm that is bearing down upon us. If the gold spot price is, if it's $1,820 an ounce in the United States, it's $1,935 in China. That's how much more they're willing to pay. And I believe this will be a trend we will see continue for both gold and silver, where the big traders will arbitrage and all the gold and silver will flow east to the BRICS nations. As we opened up Monday trading, gold in China jumped to its second highest premium on record against the international benchmark. And it opened up at $112 more. That's just the spot price. So a typical silver coin right now will cost you $25 an ounce, give or take, depending upon what you're buying. And it's vastly undervalued. Now, they haven't really messed with the silver price in China the way they have the gold price. At least I'm not seeing reports of it. Nonetheless, it is being siphoned off of all of the world's exchanges at a rapid pace. The big industrial sized bars are disappearing really, really rapidly, which is indicative of big money taking possession off of the world's exchanges. several different uses for it. I mean, like you mentioned, in terms of its, well, let's start with monetary. It's been money for 5,000 years. And it's really experienced a monetary renaissance over the last 3 years or so as people have awoken to the value found in silver, an asset that is depleting in nature, yet is priced half of its 1980 peak. Okay, I agree with that. Then we have green and digital aspirations where you need silver for solar panels, you need silver for electric vehicles and battery operated vehicles. You need silver for just about anything that conducts electricity, just about anything that is electronic. But one area that a lot of people kind of gloss by and maybe is the greatest demand for silver is military. What's different about silver and gold specifically is not only is silver used in industrial and military applications, but when it's done, usually it's to the point where either it's used in such small quantities it doesn't make sense to recycle, or in the case of military applications, it blows up. So all of the silver used in industry, the majority of it is not recycled, it's gone forever. So it's getting more and more and more scarce, and we can see that in the geological numbers that really show silver is decreasing in nature at a rapid pace, so much so that the US government came out just a few weeks ago and said that they believe by 2030 that all of the known mineable supplies will be exhausted. Now, they haven't, to be fair, done much in exploration over the last several years because it's so cheap. Silver's so cheap, it's not affordable to go and explore. Well, the dollar, the value of a dollar is the ability of the Federal Reserve to make good on its value. Gold has no counterparty risk. So absolutely, right, gold and silver would be the one that has less risk and no counterparty risk than a dollar that is losing value globally. There are countries that are working very hard to strike deals with one another outside the dollar. And as we continue to print at a pace that is unsustainable, while rates are going higher, we are putting such strain on the entire system. The whole system's going to be dragged down. And maybe that's what they're intending to do. But maybe that's why, and it's not just the wealthiest traders in the world, that being the central banks, it's the most sophisticated and well-informed, continue to buy gold at a pace that the world has never seen over the last 18 months, more than they have ever seen. And every month, it's bigger than the last. They know what's coming. There will come a point, and I call it logarithmic decay. Little by little by little by little by little, then bang, all at once. It's like going over the falls. Well, we're seeing the little by little by little by little by little. Every interview that you and I have done, we've talked more about the little by little by little by little by little. Where are we in this logarithmic decay where we hit the falls? Don't know, but we will hit that. And I think that's what you're so good at showing people is the little by little by little by little.